Yeah, it seems like most people already joined, so let's get started. Yeah, hello everybody, and thank you for joining in today. My name is Sascha Dobratz. I'm the Innovation Manager for Blockchain at Berlin Partner, and I'm very happy to be your host today. Yeah, yesterday the Blockchain in Use conference started. I guess some of you have seen it. We talked about SSI, self-sovereign identity, and we've learned a lot about the future of identity management and how SSI can help us to regain control of our personal data. But of course, today we want to talk about something different. We want to talk about decentralized finance, short DeFi, which is probably the most promising and disrupting technology in the fintech sector. Yeah, let's have a look at today's agenda. Here we go. Yeah, after a quick introduction by me, we will have 3 different presentations. Each of them will take about 10 minutes. So after about half an hour, we will be done and jump into the panel discussion and Q&A. This means if you have any questions during the presentations, please use our chat to ask your questions. We will try to answer as many questions as possible during this Q&A. Yeah, as I said, after the Q&A, we jump into the panel discussion where our 3 speakers will be joined by some special guests. Let's have a look at the speakers. Unfortunately, our keynote speaker, Alex Meurer, wasn't able to join today because he's tied up in business. He's very sorry about that. But the good thing is that we will have more time for the panel discussion. So the first presentation will be held by Martin Quensel. He is the co-founder of Centrifuge, and he will talk about real-world DeFi for real-world assets, which sounds very interesting. After that, Julian Grigo will do the second presentation. He is the managing director for digital assets at Solaris Bank. But Julian is not only a speaker today, he's also a moderator of our panel discussion. So Julian, thank you twice for being here today. The third presentation will be held by Rafael Schultz. He is the founder of Blockchain Punk Labs. Rafael, you joined in on very short notice, so special thanks to you for your flexibility. As I said before, the speakers will be joined in the panel discussion by 3 special guests. Patrick Hansen, he is the head of strategy and growth at Unstoppable Finance. Most of you probably remember him as the face of blockchain at Bitkom, but he recently started a new position at Unstoppable Finance, and I'm very curious to learn more about that. Uta Köhler is a fintech representative at Deutsche Bundesbank, where she analyzes current trends and developments in the fintech sector, of course, from a supervisory perspective. We're very pleased to have you here today. Last but not least is Christoph Iwaniez. He is the CFO at Nuri, and he's kind of an expert for both traditional finance and crypto. He worked more than 10 years in traditional finance, but he also believes in the crypto revolution. So I'm very interested to hear your opinion today. Yeah, that's it from my side. Without further ado, I want to jump right into the presentations. So Martin, the digital stage is yours.
Thank you, Sascha. Thanks for having me here. I start sharing my screen. And do you see the screen?
Yeah.
Perfect. Yeah. Why is that the wrong one? Excuse me, that's the wrong presentation. There's too many windows being open. Yeah, that's the right one. Here we go. So real DeFi. I'm not 100% sure if all the people here joining in this session know what DeFi means, decentralized finance means. So it's basically, I think, a word describing financial structures and instruments being built on blockchain technology, public blockchain technology, which has emerged in the last 2, maybe 3 years, where DeFi actually has built the instruments for every asset which is available on the blockchain or was already available on the blockchain. So basically built for crypto. Assets, as you know, Bitcoin, ETH, etc. And for those, the financial instruments, from the traditional world just being built also for those crypto assets. If it comes actually to derivatives, automated market making, lending, borrowing, collateralizing those assets, etc. What I would like to focus on here is actually how this set of financial products in the DeFi space can actually be opened up for the real world. What we're doing is basically bridging what we call real world assets to decentralized finance. What are real world assets? These are basically the non-fungible assets in the real world. A single loan, a single mortgage, a single invoice, if it is invoice financing, etc. And those assets are typically very illiquid because they have a specific maturity, like a mortgage is made, on a property paying back in 20 years. An invoice as a single invoice financing use case is made, with a shorter maturity, but could be very small, could be very big. So actually assets which are really hard to digest for investors can be pooled into what we call a pool of those real world assets. And how do we do that is we actually turn every single asset into a non-fungible token. I think one of the speakers is also later on talking about NFTs, so maybe you heard about it already. So this is also a use case for non-fungible tokens, NFT, turning a single asset in an NFT and basically pool them. By doing so, creating a pool of those assets which is providing much more liquidity. If you can imagine coming back to a single invoice, maturity of 30 days, if you have a single invoice, you need to finance it for 30 days, get paid back, you need to pay, finance the next invoice, sounds very cumbersome. If you do that in a pool of hundreds or thousands of those invoices, you just put liquidity in, the liquidity can stay there, sounds much easier. Next thing we are doing is basically that those asset pools were actually opened up for investors in the DeFi space. So other protocols, but also individuals being able to use and facilitate use decentralized finance. So, being able to operate on an Ethereum blockchain, for example, having a wallet there and being able to invest in stablecoins, actually join those pools and invest in those pools. So you basically, on both ends, you see that have a scalable solution to onboard non-fungible assets, make them liquid, but on the other end, also opening it up to investors that they do not need to consider a single asset anymore. They can actually invest in a pool of those assets. The third thing we're actually doing is to let those assets scale in the different kind of risk classes investors would like to invest in. How does it work? That is called a securitization in the traditional world. And we do that in a very simple way. We actually create two tranches of the pool. One is a senior tranche, one is a junior tranche, where the junior tranche is protecting the senior tranche. And then depending on the risk profile of an investor, you can either be more risk averse, invest in the senior tranche, or more risk taker, you can invest in the junior tranche. There are also typically, if you look at those investors, the junior investors participate in the underwriting, have a deep knowledge about the asset class, invoice financing, for example, where the senior investors may have just a broader knowledge about the asset class and then just invest in the asset class in not being deeply involved, providing liquidity, getting a fixed return on that. Important to note here is that actually the junior tranche is protecting the senior tranche. So whenever one of those assets is defaulting in a pool, so it's not paying back or is a delinquency and repayments on a specific asset, for example, that is hitting the junior tranche first. So actually the junior tranche has to take all these first losses until it's completely wiped out. And then the senior tranche is affected. And the senior tranche typically for this less profile and the less risk profile actually, and also the protection from the junior tranche is receiving a fixed income which is typically below the average return of such a pool, average return of the assets in a pool, and the junior tranche is getting the remainder. So that is actually kind of, you know, the return for the higher risk which is taken by the junior investors in comparison with the senior investors. So what it actually is opening up this year is a real world asset investment, which is completely brought on the blockchain, where the blockchain is actually providing the ability to pool those assets automatically, make them liquid, have a securitization structure on top, which is protecting investors when they would like to be protected. And last but not least, this all is completely transparent on the blockchain. So it's really a track and traceability for every single asset and the performance of every single asset. And that the price of the pool itself is also, of course, calculated by the blockchain. So you do not need an intermediary to operate that pool. Of course, if you look at legal frameworks, you still need a legal framework which is embedded in the real world. So you still need to do KYC with investors, need to onboard investors, sign subscription agreements or investment agreements, etc. But the pool and asset management itself is completely automated on the blockchain. Why are we doing those things? I think we're doing it for two reasons. One is really that if you look at how capital is actually deployed in the real world today, it is actually missing out on a few things. So we call it here the small fish tax. So that actually, especially small borrowers, as a small fish is, has to pay these taxes, and you can see that out in the real world. So that actually bigger companies have easy access to capital, smaller companies suffer. I have here added a little link to the World Bank, where also the European Central Bank, I'm pretty sure also the Deutsche Bundesbank did some research in this area, what they call actually the SME financing gap. They're almost independent from the jurisdiction, so it doesn't matter if it's Western Europe, if it is North America or this Sub-Sahara Africa, that there is a substantial gap in underfinancing or lack of financing for micro, small, and medium enterprises. That is most likely number one. The second one is most likely, even if they have access to capital, that what they would need to pay for the financing is substantially different. Where especially the largest companies on the planet have direct access to the capital markets, finance themselves with basis points. Smaller companies, if they have access, pay substantially higher, sometimes 100 times more. And the same is also true for the investor side. They're actually currently global bank profits skyrocketing, the inflation too, but small investors, especially invest in Europe, actually face very low, sometimes, especially in Germany, negative interest rates on their savings. The fixed income product, which is an asset-backed securitization, is producing, and I have described on my first slide, that is basically inaccessible for investors in the real world. With a blockchain product like this, it is accessible for almost every investor. So keep it short. So DeFi, actually, as it is built as a decentralized, open, permissionless financial infrastructure, has no barrier of entry, but currently it actually only scales for crypto assets. What we would like to do here is bring real-world assets to DeFi, bridge the gap between the two, and make actually then DeFi accessible for the real world and also actually everyone, borrowers and investors in the real world. Any questions so far?
There's no question in the chat by now, so I think people are fine.
How do I time bias? Some minutes left, or?
Yeah, go. You can go on. It's fine. 1 or 2 minutes.
Absolutely. So yeah, speaking about the real world, I think it also makes sense to give you a glimpse how that actually looks in the real world. So that is live, the decentralized application Centrifuge is providing on Ethereum blockchain with live pools where you can see what I was talking about, pooled real world assets in a fungible pool where you can just invest. So the current total value locked, meaning assets under management, is somewhere north of 44 million currently. If you look at the different asset classes, it's completely different, like real estate bridge loans to invoice financing, streaming revenues, etc. So they can actually see that a platform like this providing asset-backed securitization, which was in the past available for asset classes scaling to a couple of hundred of millions, is working completely automated on the blockchain on, I think, much smaller scale, open to investors, and their investors actually use DeFi and DeFi technology to invest in traditional assets that they do not have any ability to invest before. Thank you.
Thank you very much, Martin. Now there came up some questions, but like I said before, let's wait for the Q&A and talk about that later, because yeah, it's exactly 10 minutes now, so we can jump into the second presentation. So Julian, the stage is yours.
Thank you. So I hope you all can see my slides. Can I have a
we can
thumbs
see
up? All right. Okay, cool. So yeah, my name is Julian Grigo. I'm a managing director of Solaris Bank, and I would like to share my view on DeFi and our view at Solaris at DeFi. What I cannot share is any insights on a product yet. Of course, we are assessing that for quite a while already, also with our partners and leads in the pipeline. But again, it is not live yet, right? So, and also maybe quite interesting, usually when we are on stage as Solaris, we are supposed to be the innovators in the room, right? When we're talking with established banks. Now here in a discussion around DeFi, we are kind of labeled as TradFi, traditional finance. This is cool, and it really kind of refreshes our minds at Solaris. So who are we? And I think to better understand what our perspective on this market is, you need to understand who we are. So it is extremely important to understand we do B2B2X. So what does that mean? It is not B2B, what we know. It's not B2C, it is B2B2X. So if you look at the middle layer, and I hope you can see my cursor, you see, this is the tech stack of Solaris Bank, right? So here we have a couple of different product groups, and one of them is digital assets, but there's also banking, cards, payments, lending, but also KYC, which is extremely relevant in financial services. And then you have a layer of our partners. And we are not speaking of our customers, but our partners, because together with them, we enable their end customers with financial services. We have the tech stack, we have the license, but we do not have the front end, we do not have the marketing, we do not have the nice products that you have a nice touch and feel. That's brought in by our partners. And together we are enabling or offering financial services. So how does it look, and what kind of partners do we have? So here on this left side, we can see Samsung, Trade Republic, Vivid, and that, but also crypto companies like Nuri, Börse Stuttgart, and Bison. I'm just jumping over that because I only have 10 minutes. So what is the long-term vision we have in digital assets? And this is everything is building up to DeFi. You may wonder why I'm talking about that. First of all, as a bank, you need to have access to digital assets through storage, right? So we need to safekeep crypto assets and in order to offer DeFi products later on. Second, we need to give our customers access. So there's a brokerage product that will go live in Q1 next year. So by that, we can not only give storage and to our end customers or the end customers of our partners, but also we can give them access. So in order to make them able to buy and sell, for example, Ether. And as a third step, we want to enable the end customers of our partners to make use of crypto. Because of course it's nice to go long on Bitcoin or on Ether, but what if you can earn yield with that? That's even more interesting. A second.
Julian,
So,
you muted. There was.
Yeah, I know. I just like
Perfect.
asked my family to close the door. So what could be, for example, a use case that we are already enabling? You can think of majorly 4 APIs that you need. For example, custody, banking, and brokerage, so that you have a brokerage product that is settling fiat into the crypto wallet, or the other way around, that you have Bitcoin, you sell it, and it will be settled into the banking account. And all these 3 services, custody, banking, and brokerage, require you to be a kind of an AML obliged entity, and that it means you need to KYC your end customers. And all these 4 APIs we can give to a partner, and this partner is then enabled to offer financial and crypto services to their end customers. And here you can see a very, very nice use case. I'm happy also to see Christoph Iwaniez here on stage, and we listen to him later on. Their service is exactly what I was just showing on the page before. Nuri is enabling for years, and they are one of the first pioneers in the German crypto market. They are enabling their customers to buy and sell crypto. And the interesting part here is it's not just like an exchange. They are actually enabling to buy crypto from the account where you receive your salary. And what is even more interesting about them, they have an open wallet. So it is not like with some brokers in the German market where you can buy Bitcoin and buy Ether and just keep it there. No, they are enabling for on-chain transactions. So actually you could use Nuri as your gateway into DeFi. And here you can see why a custody product owned by a bank like us that is open, an open wallet where you can do on-chain transaction, is a crucial first step into offering DeFi products. And Nuri is a very, very good example of that. So now let's look at the crypto market itself. So who could find it interesting to engage with DeFi? And that's, of course, the people who have already crypto. So let's look at the left chart. You can see here it's a 5 years chart of digital asset market overall. So with the overall market cap of all cryptocurrencies, and you can see this is has risen 214x, which is more than 21,000% in 5 years. So November 2016 until today. That's amazing. And of course, anyone who invested back then into 16 is today a millionaire if they didn't sell, right? So let's close to, or most likely it's a millionaire, very, very likely even a multimillionaire. So that creates, of course, a huge rank of different bag holders in the crypto market. And what is here illustrated on the right side for Bitcoin, you can also use that for Ether. So, and these different customers, of course, have different needs. So let's say you take the crab who has only 1 Bitcoin, right? Or the shrimp who has less than 1 Bitcoin, or the no coiner. And maybe among the 64 participants, maybe there are people who still do not possess any crypto, no Bitcoin, no Ether, nothing. What do they need? Of course, it's a brokerage API, a brokerage product. But now let's look at the ones who already have their funds, who have 100 Bitcoin, maybe 1,000 of Ether, or just like 10 Ether worth of 40,000 euros today with today market prices. What do they need? Do they need more exposure? Yeah, of course, you can always have more, but maybe it is more interesting to earn yield on that, right? Let your money work. And this is actually quite easy in the crypto markets. And now let's talk about DeFi. I will keep that very, very short, just a glimpse on the market. On the right side, you can see the total value locked. We heard a little bit about that before by Martin. So on the right side, you see the net value locked. So it's not kind of double counting of funds that are locked in the smart contracts. It is coming close to 100 billion. So imagine that, like there are people earning altogether 100 billion, and they are entrusting these funds into DeFi. You could say like, okay, that's not only crypto. Yeah, but it's 100 billion worth of crypto. And they have locked that only in Ethereum-based DeFi, which is important. It's not talking about different blockchains. It's just Ethereum-based DeFi. And that's, of course, huge. So now let's look at the banking market. Now we were looking at crypto market, but now let's look at the banking, the fiat market, and how interesting could be a DeFi product for them. So in a situation where you have unlimited money supply, this on the right side, you can see the balance sheet of the Fed. And actually, I think every third dollar that was minted or printed in 2020 has been, every third dollar that has been in supply at the end of 2020 was minted or printed in 2020. Crazy, right? Like a third of the money sum was kind of printed in this very year. And then, of course, you have this narrative of the money printer goes brr. I don't know if you're familiar with that. If you're close to crypto, you know that. So it's actually kind of this narrative of unlimited supply and a huge inflation coming. And you can see here another pressing point in the traditional market in TradFi, right? And this is negative interest rates. We as a bank have to pay 0.5% negative interest rate with our Solaris Bank's account with the ECB. And not only have banks to pay negative interest rate, now even retail customers have to do it. And I just found from August this year already 525 banks for private clients have a negative interest rate. So you have to pay your bank just that they have your money. And that's pretty crazy. And another point, of course, there's the asset price inflation, and not only in the asset prices. So against all fundamentals, you could see actually, yes, last year through COVID, you could see on the right side here, this is this chart of the S&P 500. The prices went so doubled actually till today, and this is against all fundamentals. Even though there's a supply chain shock, even though people couldn't go to work, right? That's crazy. And then finally, and this is actually a quote from yesterday's at Frankfurter Allgemeine Zeitung, we have the CPI, the consumer price inflation, picking up, being at a height of 5.2%. I think it's the highest rate that we can see in CPI for 30 years. So this is kind of the macro environment that we are in. And now let's look at why DeFi is interesting for Solaris. And I offer you three perspectives. And this is why you now understand better, hopefully, why I'm having three perspectives. Now you think back of our business model, which is B2B2X. There is the end customer, there's our partner, and there is us. So let's look at the end customer. For them, it is, of course, interesting to earn yield on assets. That's simply enhancing the capital efficiency. They can stay long and have not to sell their assets and still be liquid. And of course, it is nice to have these assets under management, or at least the gateway in through a Germany regulated institution, what we are. Now let's look at the Solaris partners. Nuri is one of them, Trade Republic is another, Penta, Vivid, and many, many more. Samsung, they are partners of Solaris. So they can actually monetize their assets under custody. They can reduce the negative impact by the impact by the negative interest rate. Say they have $1 million with the Solarisbank balance sheet. They can swap that into a stablecoin and put that into a DeFi protocol and then not have to pay negative interest, but earn positive yield. That's amazing. Third point is, of course, they can attract existing portfolios. So they do not attract only people who want to have exposure to crypto, but the ones who already have it, but want to earn yield on that. And of course, they differentiate from competitors. And now the third point, what is our view as Solarisbank on that? Again, it's attract existing portfolios. It's differentiate from our competitors, our banking as a service competitors. Third, it's opening a completely new revenue stream. We as bank can diversify our revenue stream by offering DeFi products. And of course, there's a future opportunity that we can bring all banking partners of Solarisbank who have nothing to do with crypto. We can offer them a service that they can buy with their euro, either a US dollar stablecoin or a euro stablecoin, and put that into a DeFi protocol and earn money on that. So this is, of course, very, very big. So what do we want to be? We actually, as Solaris, want to be the gateway for fintech partners, for crypto partners into the DeFi ecosystem. I have another last slide on risks, but I think I used up all the 10 minutes, and maybe the risk part we can skip, but I'll depend on your judgment, Sasha.
I think it's fine because the introduction keynote was canceled, so we have a few minutes more. So okay, if you make it quick, it's fine.
Absolutely, I'll do it. It's just one slide. So what you can see here, it's just a list, a little bit quick and dirty on the slide. On this left side, you can see different kind of risks that we see as a bank. Of course, there's the technical risk, the smart contract risk. But here I already have a very strong counter argument. So if you look on the right side, there's the Aave protocol. It's a DeFi protocol where you can do borrowing and lending. And as you can see in this protocol, there are 27 billion, only in this one protocol, 27 billion assets locked, TVL, total value locked. So you can think of it like that way. So if there's a shoebox and there's a lot of money in it, and I put it on the street, and the more money is in this shoebox, the more people feel attracted to opening and stealing that away from me. The only reason why it has not been put out, could only be it is impossible to open that shoebox. So what I want to say with that is, Aave is not potentially not theoretically impossible to crack or to hack, but most likely it is not possible with current stuff. So there is no bug in it. Otherwise, it would have been emptied out already. So this is about the technical risk in smart contract. Then there's, of course, AFC risk, anti-financial crime. So how do we make sure we are not engaging with a kind of criminals on the other side who put their money there, let that work for them? We actually paying them interest rate while depositing or withdrawing money from that. So how do we make this clear? And there are already solutions in that. And we could hear that from Martin from Centrifuge. They are actually KYCing their end customers. So they know who is contributing liquidity to the protocol. And also Aave is working on such a product as well. So the third one is the Forex risk, right? The foreign exchange risk. So most things in DeFi are denominated in dollars because there are stablecoins who have a lot of traction in dollars. However, this is somewhat missing in the Euro space. There are things being built at the moment, and there are already things available at the moment. Do they have such amount of trust like USDC, USDT, DAI, and whatnot? That's not the case yet. So if you engage with crypto, with DeFi, it's usually via stablecoin denominated in dollars. And so you have a Forex risk. So the fourth point is the stablecoin risk in itself. So let's say you buy USDT, which is denominated in dollar again, and then maybe their reserve ends up in going belly up. Maybe there's fraud. Maybe they get hacked with the cash reserve they are having. With that, they are backing actually the token. So of course, this is another risk. The fifth point is regulatory risk. So like say you build a product now, but then MiCA, the market in crypto assets regulation, will come into place. How will that product then end up? Are we still capable of doing that with our current license regime that we have? Another point in regulation is travel rule, right? How easy is it in the future for us as a regulated custodian to engage with, for example, self-custody wallet or with smart contracts? This is not 100% clear yet. It looks quite good at the moment, I would say, especially on the travel rule. Still, it's of course some risks at the horizon. And then there are legal questions of brokerage, like would we kind of broker these protocols? How can one broker a product that is kind of fully decentralized and stuff like that? So I'm just listing that here to make it understand. So as a regulated party, things are not that easy as if I would do that on my own. I personally use DeFi a lot. This is why I'm pushing this topic a lot in Solarisbank, but still, we are regulated under BaFin, we are controlled by Bundesbank, and of course, we cannot risk any, cannot take over huge risk for the end customers, for our license itself, and therefore we are a little bit careful. Still, I think we will be among the first tapping into this huge innovation ecosystem. So that's it. Thank you.
Thank you very much, Julian. There's already some questions coming up, but I'd say we answer them in the Q&A, because now we want to give the stage to Rafael Schultz and give him also his 10 minutes. And then I'm really looking forward to the Q&A and the panel discussion. So Rafael, are you there? Perfect.
Yes, of course. Thank you, Sasha, very much. Let me share your screen with you guys.
Yeah, we can see it.
So, yeah, blockchain news conference. It's lovely that Virtual is always keeping track on that, because it's not the first one, but one of many. And I'm happy to share with you today 3 use cases from the DeFi space, which we are actually working on. So For everybody who maybe does not know us or not familiar with us, we are an accelerator and consulting company here in Berlin since 2017, and we are focusing on tokenization. Tokenization in terms of fundraising, equity fundraising by tokenization, but also we consider to drive a product, a fintech product, or maybe even normal real life products in a kind of digital manner, in a kind of digital space, and by tokenization. And here you can see some reference projects since 2017. Our teams and myself, we are coming from traditional banking and from payments. So we saw very early, like 4 years ago, the opportunity that cryptocurrencies is not only a value for storing assets or payment features, but we really believe that there's a new platform, programmable, new platforms for gaming and also for new startups. So we have a variety here. We have a cryptocurrency. We also have projects who are focusing on KYC and AML. We have also collaborations with some fundraising tools like Hedger Plus from Singapore. So when you see the whole scope, we are based in Berlin, and we did like quite a jump also like in Europe, but also we have projects running in Middle East and in Southeast Asia, mainly in Thailand and Singapore, which are very strong financial hubs. Singapore is in terms of regulation quite fast. And we are also in multiple partnerships across here in Germany and then to Asia. This is important because these are cross-border solutions you are all creating and we are all creating. So it works like generally everywhere. When you see our role, and this is like also one of the first use cases I would like to talk today to you, is that we do non-equity fundraising by tokenization, and mostly these are security tokens. And right now in Germany, we call it a nice momentum, which we want to share with you. With this, everything is like regulated to create a digital bond. You can create a digital bond in Germany, and here you can see the ecosystem of partners who are already doing it. There are several companies who did already very successful raises, and we are also providing that kind of service, supportive and help entrepreneurs, also non-blockchain entrepreneurs, to use this tool for them and to raise significant money. So the first DeFi use case we would like to share with you is non-equity fundraising. So how does that work? Here you see the examples, what happened so far in the last 12 months in Germany. So we see a huge wave now of businesses who are not coming from the blockchain space. They come from traditional markets and they try to use this new tokenization of crowd fundraising 2.0 for their own ventures. And we've seen some of the players here are also very familiar with them. But to have a bigger view on all of that, we can see that STOs are a tool next to ICOs and IDOs. But this is an analysis we have done with CoinMarketCap data by summer this year. And you can see that we have a huge explosion of fundraising projects. So there are so many token offerings across Europe and across the world. And we face now like the biggest wave of decentralized crowd fundraising, which happened ever. So we crossed already $80 billion. And if we watch this and break it down on the European perspective, you see that digital assets in Europe is just the beginning. We all say that like blockchain is like at the age of the internet, but we also very clearly see that raising money, not via a bank, not via VCs, but via tokens, has a huge potential to growth. And also real estate, we saw a lot of examples in Germany from the real estate markets. Now we see the digital bonds, and also we expect equity also to be in tokenized forms in the near future. So this is just a shortcut for you as an entrepreneur, what you should consider if you would like to do a DeFi STO here in Germany. You have, the nice thing is it is regulated, so there is a kind of instruction manual how to do it. You have certain amount of fees, you have like a budget you can also raise, and then you're allowed to raise 1 to 8 million if you do it with a VEB, which is the Wertpapierinformationsblatt. And this is quite nice because we've seen in the last 4 years so many countries who are trying to regulate it, and ICO waves not regulated. I think this is a momentum. MiCA is coming in 24, but Germany is already like very strongly prepared, and you can basically do it here and tokenize your product in that way. This is for the fundraising part. In terms of the time, I would like to share with you now some more practical examples for DeFi and tokenization. This is not about fundraising, but this is about, let me say, bringing real life products into the metaverse. And we have two other projects where we are driving the product into tokenization. One is OpenQ, which is a decentralized job marketplace for developers here in Berlin. And the other is a fashion label, sustainable fashion label, digitally founded, Yes My Love, for women and for children. And this fashion label also is bringing now its real life pieces into the metaverse in forms of NFTs. And let's kick off with a more easier example, the fashion brand. So the challenge was to bring real life pieces into digital pieces. And you see that there are many metaverses like Sandbox, you have Decentraland, also Facebook just recently changed the name into Meta. And here we have a strong founder who was eager to testify this on herself. And this is the result of the first digitalization of a kind of first NFT for a non-tech startup to bring in their whole product line into the DeFi space. Yeah, and you see here the founder on the left side. Then the challenge was to bring in piece by piece from the top to the shoe, then all of these into the Sandbox metaverse for that example. And by that, you can see that we expect there's a huge wave now of a lot of fashion labels who will try to bring in also into the digital space. And DeFi is not only for tech companies anymore. DeFi goes now into mass adoption, and NFTs are a really good example for that. On the other hand, we have the decentralized marketplace, which is creating just jobs and bounties, and then it's connecting to a down payment. So you can list your job. Any developer in the world can just choose it. He can code and program it, and then automatically the payment for the job is done by the cryptocurrency and is dropping into its wallet. And this is a huge new market for automatizing existing jobs, like getting rid of all these accounting processes, offering jobs to basically everybody in the world, and just get the things very fast done. This is how it would look like. Imagine there is an ecosystem on GitHub. GitHub is also like a place where you can list up a lot of jobs and bounties. And in here, they created a link up to GitHub issues where you as a developer then can, or as a project, you're a DAO, also like Solaris Bank or like other players, they can upload their job listings, things which need to be coded, and then the down payment is automatically done in cryptocurrencies. So this is a nice example also for DeFi tokenization when it comes to how you can use then payments or in existing processes to speed up things, yeah, and to make them cross-border. Yeah, for us, DeFi is not only like decentralized finance and fintech, it's far more. We think it's like a strong connection to Web 3.0 because you can basically use it and program money, you can program assets, but you can also program even real life pieces now and connect it to the digital world. So that's what makes DeFi for us so sexy and so promising. Thank you very much. That's for all from now. And we are based in the factory, Berlin. So, and looking forward for the Q&A.
Thank you very much, Rafael. So I'd say we jump right into the panel discussion and Q&A. I think everybody's here already, so perfect. Maybe we start with the questions about the general understanding, because I think some of the audience didn't get everything. For example, there's a question, what is the difference between ICO, IDO, and EIO? IEO, sorry. Maybe I think it was during your presentation, Rafael. Maybe you want to answer it, or doesn't matter?
So an IDO, there are many of these shortcuts. So IDO is like an initial DEX offering, and ICO is the initial coin offering, and STO is a security token offering, and there are many others. The last one I heard from a cryptocurrency DeFi guy who came from Bangkok said like an IGO. And I was like, what is an IGO? And he was like, yeah, it is an initial galactic offering. So it was a coin race inside of a metaverse where you can buy starships and teams. So yeah, there are a lot of shortcuts. It's a never-ending story. Every year there are popping up new ones.
Perfect. Thank you for your answer. Ms. Köhler, I think that's also very relevant for you, because there's but quite a big difference if it's a security token or it's an ICO, and there already is a difference, right?
There is, of course. Yeah.
Sorry.
Sure.
Yeah.
Yeah, go on, Ms. Köhler. Sorry.
Yeah, there is a difference. We have to watch out what is happening on the market, and as long as it's regulated, nowadays we are more or less on the traditional finance, as Julian called it, but the new methods, the new products, they are out there and they will be watched by us, and we will see how they work out. And we are looking forward to the MiCA regulation, which will market in crypto assets for the lovers of abbreviations. So we expect there's some heavy regulation. On the other hand, in Germany, we are a bit advanced in comparison with the European Union. So I think it will be not too bad for German players.
Good to hear. Thank you for your answer. Maybe a question to Julian, because you will switch the role to moderator after that. So maybe we can start the questions for you. There was a question: what is the advantage of using a bank to get access to DeFi? Why can't I just use all the different pools that already exist, all the protocols that already exist? I guess there are many advantages, from usability to regulation. Maybe you can mention more than one.
Absolutely. Yeah. So first of all, you do not need a bank, full stop. It is completely fine if you get your coins on an exchange. If you are a customer of Nuri, as I just said, you can buy your funds there, have that settled into the Nuri account, and then you pull that out into a smart contract. You send that in any kind of this DeFi protocols, and you can do that. So first of all, it is completely possible without us, without a centralized service. However, for that, you need to, I don't want to say be an expert, but you need to invest a lot of time to understand that, and then also feel the kind of certainty of doing that, because you do not want to send 10K into somewhere in the public address, posted anywhere, and then like haven't ever done that, learned everything only from a YouTube tutorial, and always risk of losing these funds forever. You do not want to do that. So therefore, of course, UX, a nice user interface, is extremely important. Do you need us for this? No, for sure not. This will be brought to, the service will be brought by services like, for example, Patrick is working on Unstoppable Finance, or also Nuri can offer to the end customers in the future. So a bank like us is needed if you either want to have the high security level and the trust brought, for example, to end customers who are not in the crypto ecosystem, who do not understand all this stuff around it, maybe haven't even heard of that. My vision for DeFi in the future is that people will use that without knowing it is DeFi. It is a little bit like the people buying an NFT on OpenQ or somewhere else without knowing the technology behind that, with the ERC20 contract running on the Ethereum platform being mined and blah, blah, blah. All this complexity should be abstracted away. So in the future, I think people should be enabled through their existing bank account, let's say, be it with the Sparkasse, be it with DKB, be it with Deutsche Bank, and in the background, maybe we are a part of the service, swapping the funds from the Deutsche Bank customer into USDC, and then they will leverage the tech stack built by Unstoppable Finance and Patrick's colleagues, and then it will be deposited, for example, into Centrifuge, the service brought by Martin that we heard about before. So this is, I think, the vision. But in order to make Deutsche Bank or any kind of other regulated partner feeling comfortable touching this ecosystem, that's why we are there. We bring the trust into that. We are the gateway for that because we are regulated and we know what to do. That's the vision. And we always want to be in the background, a little bit like a DeFi protocol, but in a centralized way. We are in the background, our partners have the front end and bring the customer, the nice user experience to the end customer.
Mm-hmm. Thank you very much. Uta Köhler, would you prefer everybody to do it with a bank because the KYC is much easier?
I think the people should be somehow protected, and I am convinced that with a regulated bank, a single customer is much safer. DeFi is a construct which is with no intermediate. So you don't need any bank or any trustee in the middle. You can do it on the blockchain, and you can do it pretty much without anybody. But to allow customers to use the new products, it is good to have a trusted third party. And I think a bank is very well equipped with knowledge and capital. And so I prefer to do it via a bank, but it is not necessary. If the people decide to do it outside the bank, they shouldn't complain if they lose their assets. Mm-hmm. I think it would be a very good business model for banks to offer these services, to make these products more touchable, more convenient, and so that, as Julian said, that people don't have to understand how it works, but it should work.
Mm-hmm. But don't you think, maybe question to all of you, that people at some point have to learn about this? Because if you want to play a blockchain game, or if you want to buy an NFT, you always need a wallet, and you need to learn about your public key and your private key. And aren't banks avoiding that?
Do I have to understand how a mobile phone works, or can I just use it?
Yeah, but the usability is much more far ahead, right? On a mobile phone. Right now, for an NFT game, you need a wallet. You can't do it without.
Yeah.
I would jump now into the role of the moderator and ask this, Christoph. I think Christoph has a lot of shit to share about the advantages of both self-custody and institutional custody. Christoph, maybe you can give us a hint on like what the kind of involvement in Nuri, formerly known as Bitvala, has been in this regard.
Yeah. Thanks, Julian, to play the ball into my field. And I want to give two perspectives on the discussion we have seen right now. So first of all, usability, absolutely right. Humans always choose the path of the least resistance. So if there is an easier way, like just an email address plus password, like PayPal login, that is already better than a bank account because of IBAN, and then there's another number, and then there's the PIN number. How many numbers does an old school bank send me, which I at some certain point of the process need? So and to digital banking is nailing it down to that email address plus password. And the same we can do with a custodial wallet. So it increases currently the amount of people who are able like to find their way and are not irritated to find their way into investments in digital assets. So that's on the plus, but that is the status quo. And I challenge very much looking forward 10, 20, 30 years that this holds true. I say like, and also what we are currently, the model I'm working for, Nuri, we play the game for Mrs. Köhler just mentioned, to put a banking interface in front of these new technologies, this somehow unknown territory of cryptocurrencies, and build a CeFi interface where you have a trusted entity, which in the worst case you can call and have someone on the phone, hey, my Bitcoin transaction is stuck. Then at least we cannot solve it, but we can explain it. It's about your money. You don't want to hang in the loop, and to have a central counterparty you can interact with. There's a name, at worst case in the commercial register, you go down until you find the name, and then there is someone you can somehow touch. If we like that or not. Sometimes we find people in our offices asking questions. Yeah, that happens. But that is today. And I think in the future, if you talk to people 15 to 20, they will not trust people and institutions. They will not trust the bankers in their towers with their suits in Frankfurt because they are bankers sitting in their towers. They trust code. They want to see the code. They program small bots for their daily stuff. They know that the only thing they can rely on is code, not humans. And institutions, banks, at the very end of the day, it goes down to humans. Even like the supervisors are humans, and humans make mistakes. There's sometimes something happens to a bank. But if you see the code, you know what's happening. And you can judge also for yourself if you trust the code or not. And I would argue in 10, 20 years, people will want to see the code of their financial product. And they don't want someone who tells them something about their financial product and trust that person. Even if it's a person in a nice banking tower in Frankfurt, supervised by a huge entity with a lot of employees. All of that will be less important than the actual code. Code is law.
Very nice and passionate, Christoph. We have not heard yet from Patrick. So like there are only rumors out there. We do not know too much about what you are trying to build, what you will build. Strongly believe in that. What can you already share? And what is your perspective on what we just called like with self-custody versus having an interface where you can call people? Like, what's your vision?
Yeah, thanks a lot, Julian, and hi everyone. Happy to be part of this round, and thanks a lot to Bearchain and Berlin Partners for setting this whole thing up. So my name is Patrick. I work for Unstoppable Finance since approximately 2 months. I was in charge of crypto projects at Bitcoin before the Tech Association. And basically what we are trying to build with Unstoppable Finance is really the access layer to the whole decentralized economy that was basically exploding over the last like 12 to 24 months. It has already been mentioned. DeFi has like skyrocketed from a couple of billions in total value locked a year ago to now like over 100 billions of total value locked. We have basically a DeFi application for all kinds of financial services we know in the traditional financial markets, like from trading to lending, borrowing, derivatives trading, insurance, and so on and so forth. So DeFi is one big pillar, but obviously also the whole NFT world, the gaming world. There are now games out there, blockchain-based games like Axie, where the in-game economy is bigger than like real-world economies of existing countries out there. And we think that trend will continue over the next couple of years, over the next couple of decades even. And we think that the current products out there, the current access layers out there in order to tap into those markets and decentralized economies are not yet mass market ready. And that's our big and ambitious goal, is to really build the access layer to DeFi, to NFTs, to gaming. And I mean, to make it more specific, we want to build a non-custodial multi-chain wallet, starting with Ethereum and Solana, the two blockchains that have by far the most traction in the market out there. And that's the big ambition we have. Maybe just to give my personal perspective on what has been said before on like self-custody versus custodial services, like from a bank or a like regulated crypto custodian. I believe in choices, and I think those two streams will coexist. I'm not exactly sure. I don't necessarily agree with Christoph that majority of people will understand and read code in a couple of years. I'm a little bit skeptical about that. But I think there will be a lot of people that prefer custodying their assets themselves and basically managing their assets themselves. And I think there are a lot of people that are skeptical towards like giving their private keys and basically the whole management access from the crypto assets to third parties like custodians and banks. But on the other hand, there will be always people that are just overwhelmed by the complexity of basically handling financial assets and also non-financial assets, because I guess in the future more and more non-financial assets will also be tokenized. And those people, I think they may prefer just having their assets custodied by professional services. But obviously one thing that we are trying to tackle is to make those user interfaces that we know from MetaMask, for example, on Ethereum, that we know from Phantom on Solana, to make those user interfaces more intuitive, more simple, and to basically try to provide some kind of fintech user experience on top of a DeFi rails, on top of DeFi rails, and on top of like DeFi experiences. That's yeah, my 2 cents for the start of the discussion.
Any comments from the round? Otherwise, if not, I saw an interesting remark here from Ramiz, is it, I think? He says, or she says, my biggest fear is regulators taking a heavy-handed approach and make a sweeping regulation like banning self-custody. Martin, what's your take on that? Do you see this as your biggest risk for your business model for Centrifuge?
No, I don't think so. It's more because, hey, regulation is something which is in place for everyone and is needs to be followed by everyone who would like to play on a same level playing ground. So I don't think it's just really all in together and find the right balance between what the technology is offering and how it can be used. And I think regulation will most likely not be able to follow the speed of technology, and you can already see that in DeFi, where whatever is non-real world related, where DeFi is used for crypto assets, that is just where I think most of the innovation is happening, and that is I think a nice blueprint for regulators, what's possible and what they can actually kind of look forward to put it into something that is taking actually the advantage of the technology. It's not about that it's all bad or it's just giving a lot of new opportunities actually how to make the financial system much more resilient, much more transparent, and also less relying on banks too big to fail. So if we're looking forward, things like a Lehman Brothers could actually be prevented using blockchain technology. So this having insights on what's going on, having a traceability on what's going on, and have actually a big data being available for everyone in the market. It's not like a Standard & Poor's, Moody's, whoever is kind of doing a rating on assets they didn't even understood. So that is something which technology actually can solve.
Yeah, agree. Personally, a big fan of kind of checking what's in the smart contract, as I just showed it. But still, like education with regulators and for regulators acquired, and I think this is why it is so good to have Uta, you here on the call to really have kind of a bridgehead into the regulator and the other way around, right? To really facilitate this communication, to explain this technology on panels like these. So on the international approach, Martin, you were referring to Standard & Poor's and Wall Street, and we're seeing a lot of communication going on with the SEC. I don't know who of you listens to the podcast. There's a lot of things happening at the same time, especially in the US, because it's such a dominating market. Rafael, you also had quite a international view in your presentation. What is your take? Where would you put for example, the German or European regulation on the global landscape? Would you say that is rather endorsing, or is it like a very careful approach and potentially with the risk of shutting all this innovation down? What is your take on that?
Well, I think we are in a digital race on that, and thank God. I feel that Germany is, when it comes to digitalization, normally we say always that it's losing the race, but when it comes to digitalization of assets, it looks like that we can win the race. So, and why is that? Because we have been seeing like so many attempts in New York and also in Singapore, and this was like very fancy like 4 years ago. They were doing like very huge races and solid projects, as we all were familiar with, and this was not happening here in-house. Yeah, so then there came this ACO scheme wave, and then this kind of fundraising tool was then like kind of maybe not trusted anymore, and then regulators were really deeply watching it, and now it popped up that in Germany we have like this wave of security tokens which is now available, and it's likewise, it's an instruction manual. It's like basically it's digitalization of the stock exchange. It makes the race faster. Digitalization makes it faster, it makes it cheaper, it makes it more controlled and transparent, and that's why startups can now use it. But the others are also doing their job. Yeah, so we see that Singapore is giving out already restriction in licenses because so many applications in Southeast Asia are popping in. So the regulator is not like open for everybody. They even think like, okay, now we need to regulate it also in terms of how many unicorns can pop up in that. This is a different, I think, approach. And Europe is not making any boundaries on that, which I like. MiCA is coming. I feel that Germany is now a little bit ahead of MiCA already. And if I look out, we did an analysis, where should we do it in Europe? Then I would say Germany is now #1, then Switzerland and Liechtenstein is coming. And then there is like a longer way to go in other countries, but they are popping up. So yeah, we have a chance to win the race in Germany right now.
Awesome. Any comments from that, from the other parts of around, maybe Uta? I know Bundesbank and also BaFin, a lot of communication with other regulators, especially in the European Union, but there are also kind of international cross-Atlantic exchanges on how to regulate this market, especially with looking at, for example, travel rule and the FATCA regime. How do you from the kind of from the inner side of the regulator perceive the international collaboration here?
Oh, it's a long way to go. We have all these international organizations working together, like the Bank for International Settlement is quite active, or on the European level, the European Banking Authority is the European Commission, of course, with all the preparation of DORA, MiCA is very advanced, but the communication with the other authorities on the other side of the pond is conducted in Basel, and Basel is every time it is just thought for very big banks, and it's just the European approach to use the Basel rules for everybody. We as European and German regulators want to facilitate innovation. We don't want to squeeze it and to crush it under regulation, but we see a need to regulate, to provide the regulated institutions with a more or less level playing field. It will be never level, but we can try. And to reduce the risk in the system. Financial stability is the end and the beginning for the Bundesbank anytime. And if you have such a parallel structure like DeFi allows to, technically it's easy to do. These parallel structures may bring a risk to the financial system. So we hope to stay stable and for the benefit of the customers and the economy to have a good regulation. Our colleagues are quite active in the MiCA preparation. Germany is there very much involved with good people discussing it within the European Union. So I'm quite optimistic we'll get something which we can work with, we as regulators and you as an industry using it.
Awesome. Very good to hear. Very positive note. Maybe last question to regulation before we then move on to technology and then talk more of the core innovative part. The one regulatory question I'm pointing towards you, Patrick, because I heard you worked at a tech association doing lobbying for, I hope, a technology neutral regulation. Maybe you want to elaborate a little bit on the one question we received, and I think that was again Rameez, not sure, like the one, no, Sassoon asked, can you elaborate a bit what MiCA will impact on? So Patrick, maybe make it concrete, like can you give one example that MiCA is trying to regulate and maybe show the advantages or potential disadvantages through such a regulation?
Yeah, sure. And I miss the days together at Bitkom, Julian. So I'm not sure everyone is aware of that, but Julian and I were colleagues at Bitkom before. So what is MiCA trying to regulate? So MiCA stands for Markets in Crypto Assets Regulation. It is a proposal by the EU Commission from end of last year, 2020. And it basically tries to regulate two things: the issuance of crypto assets and all kinds of services based on crypto assets. For the issuance of crypto assets, it just set some standards of, for example, what kind of a white paper has to be drafted, what kind of marketing activities can be started for that issuance of a token. And then obviously on the other side, it's like basic supervision and regulation of financial services, very similar to what MiFID and other European legislation is doing with traditional financial services. So basically MiCA is providing a framework for services like the custody of crypto assets, the trading of crypto assets, brokerage, advice, all kinds of services. And those companies that want to provide those services on crypto assets in the future, they have to comply with, for example, liquidity requirements, governance requirements, all kinds of operational requirements, capital buffer requirements, for example. So there is a long list of compliance requirements that those companies have to comply with. And obviously it's for smaller startups, it's kind of a high barrier to enter this financial market. But the positive thing about MiCA is that it, on the one hand, it really creates a harmonized European market for crypto asset regulation. And also those are all like binding rules. That means that the current regulatory patchwork in Europe, with like some tough rules in Germany, no rules at all in other countries, like, I don't know, for example, more like lax regulation like in Estonia or Malta, all those rules will be substituted by MiCA.
I would like to add to this thought that also, like we always forget, there are so many service providers who are connected into crypto asset startups, and also this regulation affects them. So it's what we see in MiCA is that we have finally a draft across Europe that when a startup is then applying, doesn't matter in Germany anymore or in France, then you have this European license which works everywhere, and this gives just like for everybody more transparency and more security, because then users know, okay, if I'm founding that kind of company in Europe, then it's according to this regulation and all Europeans can use it. This is not a fact today. So it's a little bit like the Währungsunion of the EU or something in terms of crypto, what is happening here. And that's, we also like it, and we are waiting for it.
Perfect. Thank you, Rafael. Thank you, Patrick. Just one hint to the speakers and the panelists. There's a lot of questions popping up in the Q&A. We can't answer them all live, so maybe if you have the chance, try to answer them in the Q&A function of Zoom. And yeah, I hand back to you, Julian.
Thanks, Sasha. And in the interest of time, I would have one final question to the ones we have not heard too much here today. It is Christoph and Martin. Let's now put the regulatory part aside and look at and maybe end on a very positive note and look into the future and be a little bit crazy. So we could already see things that we couldn't imagine before in DeFi, especially with this DeFi 2.0 wave, whatever. What would you, Christoph, love to offer your clients in 2022, maybe 2023, 2025, whatever? Like what is the thing that you would really love to see, or maybe potentially build by yourself, and through DeFi being running on a globally settlement layer, it could be offered anywhere. So in your wildest dreams, what would that be? Christoph first and Martin second.
What I would love to see is that we find a way to link the traditional securities and shares to a more digital form and digital usability, so that it's possible to build digital funds which are not having a break point, that at the very end you still have to acquire shares which are held in custody and then run over clearing banks. And if you want to bridge it to a DeFi world, then you basically have to re-securitize them again. This is unnecessary. This creates just overhead. It just at the end costs the customer money, and nobody wants that. So the original promise of the blockchain was to cut out intermediaries, because it's possible. It creates trust and security for all involved parties in the trade without less intermediaries, high transparency, low costs, cross-border, another issue. And to fulfill that promise, then we need to basically cut through to the actual asset and not always try to mirror it, which is the current solution. And that, I think, opens a lot of new use cases, will revolutionize the fund and asset management industry in the favor of the client, 100%.
Probably perfect link to you, Martin, with the real assets on the blockchain, tokenizing real assets, right? So what's your take on this question?
It's most likely, if you look at what I'm dreaming of, is most likely that the decentralization aspect gets stronger, and that decentralized finance is paving the path for decentralized economies of the future, where, as you may, with DeFi can already see that it doesn't matter how big a bank is. A project just need to provide the right functionality, appealing use cases, and people will use it. And it is actually the community deciding what's successful and what not, that also happens to other parts in the economy. So that actually, scale can happen in a decentralized way, and it's actually less dependent on size, and that a decentralized economy is also most likely much better in adopting and changing under the current challenges we are in, if you look at climate change, etc. So there's a lot of things where I think the economy as we have it today is just too slow to be responsive and act in the time we need.
Awesome. Very nice outlook. Very cool panel. I will hand over the moderation to you, Sasha. And thanks to all panelists.
Thank you very much, Julian. As you can see, there's so much to discuss. It was a very lively panel discussion, and I think we could go on here for hours, but unfortunately that's not possible. Just one more time, there's still some open questions to all the speakers. If you have some time, you can answer them in the chat. But we have to make a cut here because the recording will stop in a minute. So thank you everybody for joining in today. Also, thank you to the audience. There was a lot of questions, a lot of interest. I guess we can all see that DeFi is getting more popular every day. That's a very interesting topic, and we're really talking future here. So thank you everybody. Thanks to all the speakers. It was a great evening, and bye-bye.
Thanks for having us. Ciao.
Thank you.
Bye.
Thanks. Bye-bye.